Good morning, Wall Street winners. It is August the 29th, Thursday morning, and it is 5 minutes before 8 o'clock in the morning. So we've got an hour and a half, hour and 35 minutes to trading. If we take a look at what's going on in the markets, obviously NVIDIA came out yesterday after market close and released results better than expected. They beat on earnings, they beat on revenue, they had a positive future forecast, and yet they were still not able to satisfy what the analysts and the market were looking for at this point. So they're down slightly. They tumbled more last night and after hours trading. They are not down as much now, but they are down. They're down $4 or $5, depending on what's going on when you look. I think that this is a company that, in terms of the stock, it's going to get back up to the 130s, even 150s by the end of this year. It's got so many things going for it in terms of activity and output and new technology, chips and development. This is just, it's hard to call beating expectations on revenue and earnings a minor setback, but it's all about the expectations that have been set here. And people in the market were looking for the beat to be much greater, as it has been in the past. And I don't think it's possible for that to happen time after time after time, quarter after quarter after quarter, but that's what the market wanted. So it's off a little bit. Do I see money shifting to different sectors because of that? No. I think there's still going to be tremendous demand. And if anything, today's a buying opportunity to get into NVIDIA at a discounted price. If we take a look at where we are in the markets overall have digested the information fine. It wasn't the only company to come out yesterday with earnings. It was the one that most were waiting on to see the direction of AI and things to come. But AI is continuing to accelerate, and there's no question about that. And there's nothing disrupting it at this point. Now, the biggest factor for disruption is a Chinese invasion of Taiwan. If that happens, semis will fall 35 to 75%. Like, they will fall immensely on that until that issue gets resolved. But we're not there. It's not even being talked about. So let's not go there. If we look at the indexes, we've got the Dow, the S&P 500, and the NASDAQ. They're all in positive territory, which is great. If we flip over to the Yahoo Finance app, you can see that the NASDAQ here is up. The VIX is down slightly, which is positive. That means good news. We're waiting on a jobs report today. That'll come out later in the morning. We'll see what happens there. I think it comes out 8:30 pre-market, so another 30 minutes. Lulu's coming out today with earnings. I would not be buying Lulu. Lulu had a super off day yesterday. I would expect earnings would be down in Lulu today. I'd hold off on that. Dollar General came out this morning with earnings. Horrific earnings. They are saying that their revenue and earnings have fallen due to consumer discretionary spending, and this is in one of the weakest segments. So this is the low-end consumer, but probably also the middle-tier consumer as well. But they're off 24%, 25% pre-market. I think this is a steal to get in on this at this discount. Getting in on this at 93, I think within a month, it'll be back up to 100. So I would definitely look at buying some Dollar General today once it finds a bottom. So wait for the market open, see if it continues to go down at all. I don't think it will go down that much more. And then I would buy into Dollar General and ride the bounce back in the next couple of days. And then you could sell a dead cat bounce. It'll come back a bit, or hold on to it for a month or two. And I think you'll be in good shape. The rest of the retail and healthcare, not doing much, but primarily in the green at this point, which is a good sign. If we scroll down to our oil stocks, so we can see that today crude is in the green. So it's at $75. That's positive for crude. And most of crude is now trading in the green as well. Crude has been very volatile. It will continue to be very volatile as the issues in the Middle East continue, and the explosions, the killings, the everything over there, the attacks all continue. So that bodes well for movement and the ability to make profits in our oil stocks. So take a look at where these are in comparison to their recent highs and lows, and figure out that window, the trading envelope, the trading window, and buy in towards the low part of that window and just wait for a rebound. That's a great strategy with those. Then we get into tech. And tech got hit hard yesterday. So a lot of these stocks were off. It was a great buying opportunity. I posted that in one of the videos yesterday. So hopefully you bought in, and hopefully some of what you bought on the guidance here has gone up. So if we take a look at what we talked about yesterday, CrowdStrike. CrowdStrike, it is off yesterday and off today, and it was up on earnings after earnings came out, but now it is down slightly. So again, this was a call we made thinking that earnings were going to be off for this company. They weren't. Earnings were positive. Revenue was positive. It was a surprise, but the company is still off and down. So that was a correct call in the end. It was an incorrect call yesterday after hours, but it has now kind of corrected itself. So we told you to stay away from CrowdStrike because of that outage and its potential effect on the quarterly report. CRM, very bullish on CRM. And it had good results, revenue, earnings, raised its future guidance for the year, and it is up $12 pre-market. So this was a recommendation to buy and get in on yesterday, and that is a $12 upside right now. So fantastic stock to be in on for the remainder of the year. And then we have, as we scroll down and take a look at some of our others, ARM. We said if NVIDIA didn't blow it out of the water, ARM would come down. ARM came down yesterday. ARM is down again now. I think ARM will continue to come down into the 110 range. And at that point, or anywhere below 110, would be a buy signal for me on ARM going forward. We've got another great company we don't talk about very often that was off yesterday, Shopify. This company has been hitting it out of the park recently. This would be an incredible buy and hold for the next, I'm going to say 3 to 6 months, getting past the Christmas season, Thanksgiving and Christmas, into January. At least through the election timeframe, I think this would be an incredible hold. I think you'll do very well with that. Scrolling down further, we've got Workday. Workday is up slightly. IBM we talked about is kind of a stalwart the other day. It is up slightly, a bit of a hedge. Lam Research. Lam Research has been beaten up. It's looking like it's going to get beaten up again today, down $14. Nothing with NVIDIA's results indicate that they're not investing in spending money and that companies aren't spending. So Lam Research, as it drops, becomes an even more attractive purchase. If it drops under $800, this is one that I already own, but I would look to add to my position. MongoDB, glad I hit that. It comes out today with earnings. I think the earnings on Mongo are going to be very positive. So I would take a look at adding Mongo to my position today and selling it on an earnings bump tomorrow or the next couple of days as that climbs up. Others that got hit hard over the last few days, not super hard, but hard. Meta came down into the 516 range. I think that's a fairly decent price. I mean, I would love it at 490. Don't know whether it'll get there, but that stock is going to be a $550 to $600 stock by the end of the year. And then we've got NVIDIA. NVIDIA is off almost $5, $4.50. I think you're going to see this come back throughout the day. I don't think it's going to be down that much at the end of the day today. So I think it will regain some ground. The expectations for this company are high, but it is driving AI. It is the machine behind AI. So to say it's too big to fail is probably wrong, but to say that it's too important to fail is probably more in line. It seems unfathomable at this point with the lack of competition in this market currently, and that will change, but currently with the lack of competition, that this company cannot continue to go upwards seems unbelievable at this point in time. Google dropped yesterday. Great buy under 165 there. I think that's a solid purchase. And then Adobe's got results coming out on September 12th. I don't think you can go wrong with Adobe. It's making comebacks. Software companies like CRM and Workday, the SaaS companies, they've all started to show better numbers. And I think Adobe's going to do the same thing. And then finally, down into financials, we made an incorrect call on Affirm. I didn't believe Affirm was going to do well. It had a bad quarter last quarter, came out, had a great quarter. So it is up almost $7. That's a heck of an increase in percentage terms. It did very well. Still loving SoFi. SoFi looks like it's going to be up 10 cents today, but it was down about 28 yesterday. So if you bought that on the dip, you should be doing pretty good today. And then JP Morgan, Morgan Stanley, Goldman. I think these are all great companies to own as we go into interest rate reduction times. We also heard from Royal Bank of Canada today. They had great results. So did CIBC that we talked about a little bit yesterday. We follow that at the bottom here. Nothing showing up pre-market on the Canadian side, but that is a stock set to pop today. And then Schwab. Schwab looks like it's going to be up today as well. So overall, I'm expecting a green day today. Should be a good return to some positive upside in stocks. I hope you're liking these videos. If you are, please subscribe to the channel. Share it with someone you know that's interested. Leave me a like and a comment if there's something you'd like me to cover. Good luck today.